Hey everyone, Bob Kendall here. Just want to thank you all for watching my videos. If you do want to support the channel, go to www.kendallreport.com/wavetech. Sign up for our software. You get market grid on 165 individual stocks and indices. You also will get 16,500 buy and sell signals on our entire database. I thank you so much for supporting the channel. Those of you who have already signed up, thank you so much. Welcome everyone to the Kendall Report, where I share my 41 years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. Well, folks, we did see some weakness early in yesterday's session, and we continued to see that weakness for about the first 3 hours. The buy the dippers came out, rallied the market back, but then faded it into the close, with the S&P finishing down about 0.4 on the session. As I've been discussing over the past several sessions, as I continue to expect to see this market churn up here, but one of the key elements that I've emphasized over the past several days is that 10-period moving average. On the SPX, it was able to hold just above that level on that rebound rally today, but overnight we're seeing quite a bit of weakness, and that number is going to be challenged again tomorrow. The other thing that I'm going to be talking about in the video tonight is the selling that's starting to show up in our database. I mentioned in last night's video that I was encouraged that we didn't see a lot of selling on the downtick, but tonight that's not the case. There were quite a few, over 1,500 sell signals come out of the system, pushing the database down to around 45%. I'll go through all those details here in just a few minutes, but the realities of what's going on in the market here is it's really struggling. There's not really anything in the markets for it to hang on to. We also saw the claims come out yesterday around 860,000. That was not a good number. Continuing claims came in around 4.5 million, which I was expecting. I see that number just stable at the moment. We also saw the housing starts come out. That was down 12.2%. That's a big number. This has been one of the hot spots driving the rebound in the economy. All of a sudden, we're starting to see some faltering. In last night's video, I mentioned that there was a mixed picture. Well, it's becoming clearer. And if we don't have the real estate market doing well, there's going to be more deterioration as we go forward. So market participants appear to be getting a little bit nervous up here, as there's not a lot of oxygen above this 3,900 level. So today's close is going to be critical. I've also been talking about this annual event of February 21st. Well, tomorrow's the 19th. When we come in on Monday, it'll be the 22nd. This was the event that happened last February that we saw the market really start to decline sharply as we went into the March lows. And I've been talking about this and how the PPMs are set up. I'll go through that detail tonight. But there are some risk here. And right now, there's quite a bit of support below the markets in the mid 38 handle. I'll go through that. But there are some risk. I've also been talking about the risk in Apple and Tesla. We're continuing to see pressure in those markets, and they're telling us that something's not just right here. And this is a potential for the markets to maybe push and roll over just a little bit. I still don't see the major blow coming to the market at the moment, but there are risks building. Our intermediate database gets updated after the close tomorrow. That's going to be interesting to see if we start to see some selling. I'll review the database on Sunday night so we have a clear view as we come into next week what to expect. But I do think there will be some selling come in, especially if we end up under the 3903 level minimum. And if we finish under 3900, that will set the tone for some liquidation. Let's go ahead and take a look at the charts, see how they're set up for Friday and the end of the week. As I begin with the S&P 500 futures, we are down 15 handles overnight. We have bounced slightly off the low. We were down to 38.90, currently trading 38.94. This is going to be critical. 10-period moving average on the futures is 3909.95. Looks like we're going to close below that. I mentioned the major support in the middle of 3800, 3855 is the 21 period moving average, but this is the concern. And last night I talked about we had penetrated the first derivative on ppm1. We've now taken out the second derivative. We've also done the same thing on ppm2. And this is signs that this market is starting to roll over here. And the potential is to go down toward the 3,800 level, 3,807, and that there's still a number of support levels that are likely to hold this market. And I'll show you that when I go through the SPX. As we look at the SPX yesterday, the 10-period moving average 39.1244. The close yesterday 39.13.97. This was right above that 10-period moving average. Now, if we close below that number, and the more significant number, which I'll show you on the weekly chart, is 39.03. So a close below that level after rendering a new high this week would be significant. There's another event that's unfolding. Now, last week's low was 38.84.94. Right now, we're looking at the low this week at 38.85. If we can take out that low, that would be a decent decline right now, because that would suggest that we need to be down about 30 handles. But if we did take out that 84 number and close under the 39.03 level, that would represent a outside reversal pattern, and coming off an all-time new high, that would be significant. We do not have that at the moment, but those are the numbers to watch. So if we take out the 1884.90 level and close below 39.03, that's going to be the thing to watch out for. If we do get that, then there's some potential for a decline back to the 10-week moving average, which maps out perfectly to the 40-day moving average at 38.05. So this would be a retest of the lower 3,800 levels. As I mentioned in the opening comments, it does not appear that the markets are going to be in a mode to roll over on a large scale. But we are seeing something that is concerning as well in the PPMs on the weekly, is that PPM1 is flat. It's still up at 0.66, which is definitely a trend mode. That tells us there right now is only a 40% probability to decline below the 38.05 level, which I don't expect will happen. That should hold. But if we did, the next level is down at 36.54, around 3,700. So I don't think that's going to be in the cards, but we could see some weakness down to somewhere between the 38.25, 38.05 level. And I also mentioned a couple times that the patterns in Tesla and Apple are rolling over. Those could be the leaders on a rollover. It's going to be very important to watch those markets as well. Just a quick comment in this annual event that I've been talking about. Here is 218. This is the 21st I talked about. It was the final day of it staying within the grid, and then we saw the sharp decline start on the next several days, coming into the 24th, all the way down into the 23rd lows. And as we all know, that was a substantial decline. There were some metrics out there that were happening that we probably will never see again in this lifetime. Let's hope not. But as we look at the PPMs, they were coming into that 21st on the 19th last year. PPM 1 was at 0.26, ppm 2 was at 0.09, so everything was rolling over. You can see the downward slope here. Let's take a quick look at the current market, and we'll see a couple characteristics that are similar. Now, we were on the ppm, we were at 0.28 just 2 sessions ago. Yesterday we ended up at 0.22. We're at 0.08, so we're starting to roll over. We're below the 10-period moving average, so this is the setup to at least challenge some of these moving averages. I don't see us as totally as the vulnerable event, but there is a possibility, as I mentioned in the earlier comments, to get down into 38.55, maybe 38.25 levels. The key level on the upside for today will be R2, which is 39.3150. Next market I'll cover is the NASDAQ. As I've been discussing over the last couple of days, we've been hovering above the 10-period moving average. Yesterday, we got a close below the 10. We're seeing some follow through again tonight. And the PPMs, as you can see here, have all rolled over. Momentum on a short-term basis for PPM 1 and 2 is basically non-existent, which tells us there's now only a 20% probability for the market to remain above 14,493. And as you'll see in a minute, as I was talking about the outside reversal on the S&P, which has not occurred yet, it has occurred on the NASDAQ. But this is critical what's going on here. So let's take a look at the weekly chart. You'll see that last week's low was 13,516. The high was 13,820. As we looked at this week's high-low, the high is 13,900, the low 13,468. So if we remain below the S1 number on a weekly, which is 13,648 on a closing basis, this will represent an outside reversal, will suggest at least two possibility of 3 weeks of declines. And with the PPM1 still at a 0.92, it tells us that 13,144 should be major support. The likelihood of getting down toward the 12,474 level, that would take multiple weeks, and next week's action will tell us a lot. The critical level on this market will be that 13,648. If we get that closed today, this will confirm the outside reversal bar and also confirm that we will decline toward that 13,145. The extreme that we're likely to see would be moving down to the 21-period moving average, but that does not look like that's likely. With that 0.93 PPM2, this is going to keep the market in that upward slope. The worst case would be that the market would hover a little bit below or above that 13,145 level if we get the confirmation close on the reversal. The final market that I'll cover tonight is gold. Gold continues to decline, pressuring the lows. We've actually made a new low in this sequence, trading below that big broad trading range that I discussed last night. Gold looks like it wants to continue lower. We saw a big reversal. I talked about the only positive last night was PPM1 turning up. Well, it's flipped back down tonight, and we're seeing all three of these averages move back into trend level. So we're looking at PPM1 at a 0.25, PPM2 0.26, and PPM3 at a 0.14. So this is definitely going to keep a lot of pressure on the downside. As we look at the weekly chart, you can see that STX is 1760. We are currently trading below the STX number. So if we did finish and close below 1760.8 tomorrow, that would be an STX buy signal suggesting 1 to 2 weeks of upside action, basically a sideways move. That would suggest there'd be a possibility of some support coming into this market. If we close above that level, then it's likely we'll see a further declines as we come into next week. The PPMs also have rolled over, and PPM1 is now at a minus 0.43, PPM2 minus 0.28, and those are both in trend mode. On this side, the only thing positive is that we're seeing PPM2 trying to turn up above its first derivative, but there's so much downward pressure on that 10-period moving average that we're going to see a continuing downtrend in gold. The 10-period moving average is declining about $10 per week, so that's going to be 1836, 1825 to 1836 is going to be major resistance. As far as support goes right now, there's really no support until we get down to the monthly S3 level, which is 1722. Right now, S2, 1766 on the monthly. We're basically trading at an S2. It should hold here. We also have the 21 moving average right at that S3 level, which is 1726, and that number will be in play as we into next week's market. This will complete the video for tonight. Thank you so much for another great week. I appreciate you coming to the live streams and participating in the channel. Thanks again. We'll talk to you on Sunday night.